Hi guys. Today we will analyze Constellation Brands stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Both the short-term and long-term trends are neutral. Nothing spectacular is happening here. There should be more interesting stocks out there. Strong support levels are around $240, $232 and $223. Next strong support levels are around $210, $188 and $172. Strong resistance level is around $252. Next strong resistance level is around $258. In the last month the stock has been trading between $230 and $252 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.1 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 4% per year, for last 5 years. We see that the average profit margin of the stock has been around 19% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 58% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Constellation Brands Company: bad, average, and good. First scenario. Constellation Brands will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 14%. Future free cash flow to net income rate would be low, 40%. In this case, the fair value of the stock today would be $73. Second scenario. Constellation Brands will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 16%. Future free cash flow to net income rate would be average, 50%. In this case, the fair value of the stock today would be $109. Third scenario. Constellation Brands will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 18%. Future free cash flow to net income rate would be high, 60%. In this case, the fair value of the stock today would be $157. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 6.58. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Constellation Brands, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 22. Again, I will use 3 different scenarios for Constellation Brands Company: bad, average, and good. First scenario. Constellation Brands will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 16. In this case, the fair value of the stock today would be $64. Second scenario. Constellation Brands will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 20. In this case, the fair value of the stock today would be $94. Third scenario. Constellation Brands will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 24. In this case, the fair value of the stock today would be $134. As you can see, today the stock is overvalued, $241, even if we expect the company's high performance in future. The company has a medium financial health rating, its profitability is only medium as well. Also, the stock is expected to show a small growth in revenue in the next 5 years, 6 to 8% yearly. Based on that, the stock looks overpriced at the moment. I may consider buying the stock when the stock drops below $160. Company's strengths. Constellation Brands is an American producer and marketer of beer, wine, and spirits. It's the largest beer import company in the U.S., measured by sales. It also has investments in medical and recreational cannabis. The company has more than 100 brands in its portfolio. Wine brands include Robert Mondavi, Kim Crawford, Meiomi, Simi Winery, Ruffino, and the Prisoner Wine Company. Constellation's beer portfolio includes imported brands, such as Corona, Modelo, and Pacífico. Spirits brands include Svedka Vodka, Casa Noble Tequila, and other. The company operates in an industry that has demonstrated stable revenue streams. Constellation is expected to emerge from the pandemic in a position of strength, as beer shipments remain strong, and the company moves past the headwinds created by the sale of certain products to Gallo. The company will continue to gain market share, as consumers purchase alcoholic beverages for home consumption, and restaurants reopen. As we get more clarity regarding what the contours of cannabis legalization will look like in the U.S., the Canopy investment could yield significant upside. The company's profit margin of 14% is amongst the best of the industry. Its return on assets of 5% is in line with the rest of the industry. Risks. Risks include a capacity expansion in Mexico, higher commodity costs, cannabis market fundamentals, increased discounting, and weaker than expected consumer demand. The company faces fierce competition and, like other producers of alcoholic beverages, is subject to significant regulation. The spirits business is also seasonal, and depends heavily on sales in the second half of the year. Sales of premium wine and beer may also decline during economic downturns. Even the weather is a risk factor, as Constellation is a major purchaser of agricultural commodities. Analysts have corporate governance concerns, relating to the company's dual-class stock structure with unequal voting rights, Class A, ticker STZ, and Class B, ticker STZ.B. The company has a high debt level. The company has a return on equity of 11%, this is below the industry average of 16%. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6 to 8% on average per year. The earnings per share is expected to grow by 10 to 12% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.